Hello and welcome to Scrolling with Ceazor. Today is August 5th, 2026. Okay, I've got a lot of tweets for you today. A lot of people talking about the same thing, but I'll get into it. I did mention it yesterday about the ETH issuance reduction proposal. Anyhow, so let's take a quick look at the charts and then we'll look at some tweets. And as always, this is not financial advice. This is just me talking stupid shit about stupid stuff. Okay, so here we go, and ETH charts look okay. Everything's kind of sideways and so forth for the most part. Yeah. So there's that. ETH is, everything's like just less than 1% up or down for the most part. I think most crypto's up a little bit. It's going sideways. So one of the things I wanted to mention that I came across a little while ago that, Alex from Aerodrome reminded me of, well, you kind of just brought the thought to the surface, okay? And I want to kind of echo it here today. And that is like when you provide liquidity on Uniswap, then this chart down here at the bottom, the volume, is the most important thing to you. Because if there's very little volume, then your APR reduces significantly, right? But if you provide liquidity on a reward token protocol, such as Aerodrome or Ramses or any of the like PancakeSwap, anyone's like SushiSwap that give you actual tokens as rewards for your fees, then all you have to do is make sure that you're in range. And as long as you're in range, then you're getting a steady APR, so to speak, right? Now, assuming that the token price stays the same, right? Now, the token price is subject to this volume chart. So if the volume does not sustain or goes down and sustains low volume for a long time, then that token price is probably going to be affected because people are less likely to then lock it and more likely to just sell it because it's not generating yield to when they lock it, right? However, people tend to lock it when things are juicy and then regret it later because they can't unlock it for the most part, right? So yeah. So I thought I would just mention that. Let's take a quick look at these charts. So I've got this. We've got Sonic looking pretty good. It's again, I guess you can't say it's looking great, but anyhow, Hype is starting to recover from that bottom where it was bouncing around. Let's take a look at this gold chart. So there's a nice big pump on gold. Now I got something on gold that I'm going to share with you that I came across a little while ago, and I'm going to do a video on it eventually probably, but right now I'm just too busy. Okay, I also forgot to kind of jump in here and talk about the stonks on Robinhood. So yeah, just to kind of give you a little update of what I've done here. So the S&P jumped out of the top of my range, so I pulled everything. So I pulled all my stablecoins out of this guy, and now I have no exposure to the S&P right now. Now, if it comes down significantly somewhere, I might join back into this. But anyhow, so I did do a little assessment of a few protocols. I saw Meta was looking pretty good at its range, so I opened up a nice wide range, stablecoins below and Meta coins above. Right, so that's happening. Google also has had a significant dump, but it's still in my range. So I have a very tiny amount of money in this right now because I pulled most of it when it pumped out the top of this range. But I kept a little bit in. I just widened the range up. So I did open a Tesla position as well. I feel like Tesla's down significant and it's kind of oversold. Especially versus price to earnings ratios and stuff like that. So I opened up this nice wide position in here to farm some fees inside there. So yeah, let's move on to the tweets. So the first tweet today I'm going to talk about is this thing called Enhanced, okay? Now Enhanced is a place where you can stick gold. So Pax Gold in here. And it basically farms the volume. Like I'll have to do a video to explain it. I don't think I can explain it very easy, but let's kind of find that one tweet that shows you what it does. It turns gold volatility into income. So it's kind of selling covered calls to people, right? So I'll make a video to kind of explain it so you can understand the risks a little bit more. But this thing is live now. If you go to the app, you can click here. You can go in. You can deposit Pax Gold in there. You can decide if you want to compound your Pax Gold. So right now is a pretty good time to buy gold. Well, yesterday was. And well, maybe it still is, right? If you look, it's still pretty decent, right? So yeah, you can buy more gold with this thing, more Pax gold, or you can, now this is the Tether gold chart, so you have to get the Pax gold one up, but it's probably pretty close, right? They generally peg pretty well. And, or you can decide to take your rewards in USDC, right? So yeah, that's how it kind of works. So you can check out these charts or this thing later when you have some time and understand if it's better or if it's something you want to deal with and so forth. But anyhow, I'm kind of going to look at it and thinking about it and so forth. So I thought I'd share it. Moving on. So here we have Mike from EtherFi. His thoughts on ETH issuance. There's that proposal I talked about yesterday of like reducing the ETH issuance. If 50% of ETH is staked, then issuance should be zero. That's the proposal, so to speak, right? Now they justify it with reasoning and so forth. But Mike comes in and says like, you know, to increase the issuance is even stronger than to decreasing it. To not messing around with it is even more stronger. There's better things to worry about. Privacy, interoperability, faster block times, higher throughput, and 20 other things. So yeah, I kind of agree with them. Like people, the only thing that it's going to do, in my opinion, is going to have some effect on price because you have all those like institutions looping up the LSTs, farming that issuance rate, and then just dumping it for stable coins or fiat, right? So that's the only thing that's kind of happening that's bad about the issuance right now. But anyways, let's move on to this guy here, Igneous. So that proposal dropped yesterday, and as a result, both EtherFi and Lido dumped like crazy, down 10%ish, 8 to 10%. Just like, so what does it say here? It says 2.6 to 1.2%. Oh, okay, so dropped significantly. How does it affect? Like you can go through this and read how it affects. I think it's pretty obvious because EtherFi and Lido have LSTs that are looped up, and if people aren't looping them anymore, then the actual protocol itself is going to be generating less yield. There's going to be less staked, you know. So yeah, you can kind of go through this and read it, but I think it's pretty straightforward. But I do think it's kind of crazy. Like it's kind of a dangerous thing to do right now because so much DeFi depends on these LSTs, and the LSTs being like I use them as like crazy for collateral as well as LPing. I don't want it to be reduced. Anyhow, moving on. So this is pretty interesting. So Lighter's an L2 perp chain. So it's basically like Hyperliquid competitor, but uses Ethereum L2 systems, right? So he says he runs 300 Mac minis all across the US, generating proofs of every order, cancel, and liquidation that was handled fairly. Is verifiable exchange actually looks like under the hood. So I didn't know that, and I think it's pretty cool. I used Lighter a little bit when it was kind of like coming out to try to get like an airdrop, but I didn't get any airdrops, so I'm a little bit salty or butthurt about it. So I haven't been using it since then, and I don't really like trading perps. Right now, I'm using Rise with like just a couple $100, but I always lose my money when I trade perps, so I don't want to use it. I don't want to trade perps, but at the same time, I feel like, yeah, maybe I should because airdrops are airdrops, and generally speaking, you can make some decent money with an airdrop. So I don't know, but anyhow, I found this to be pretty interesting. 300 Mac minis all across the USA. So he's got a distributed network of Mac minis to verify that like the actual black box stuff is being handled properly. Okay, so here's an article here. It's pretty interesting. Okay, so you can read through this whole thing. I don't want to get through it all for you, but like basically these guys at Iris Credit, they looked at Aave, Morpho, Xerox Fluid, Euler, and then they designed their Iris system. So you can kind of read through here, and you can see like what's going on, like what are these different options. So it's a great way to kind of get a taste, a little TLDR of different kinds of things that are out there right now. It's not extensive or all-inclusive because there are a lot of other opportunities out there beyond those specific protocols. But anyhow, so you can read through this and kind of get a little TLDR on those if you're new, or you can just skip down and see what Iris has built to see if it's something interesting. I haven't read this thing, what they built yet, so I don't know, but it kind of looks like fixed rate trading, fixed rate borrowing and so forth, or term borrowings, because you have some maturity dates and stuff like that. Anyhow, so moving on. So this is what I was talking about like a few seconds ago. I wanted to put this beside the lighter one, but I accidentally put that little Iris one in the middle there. So anyhow, so 90% of the users on every perp dex are airdrop farmers. I agree. I only use it because I want a possible airdrop, because I hope I can get that hyper liquid airdrop that I got, and that'd be nice, but I don't know if it's ever going to happen again. But yeah, so that's what he's saying. You can kind of go through and see where his proof is and so forth. But I agree for the most part, because I'm an example of it, right? So Silo Finance, this is another one that Iris should have looked at Silo Finance, because Silo Finance is actually the one who created isolated markets first, and then Morpho kind of came after. I don't know if you can say they forked them or not. I don't know, but they definitely came after. So but here they are helping people. Some people quite a bit of people were not exploited, were lost money because of Stream Finance and their XUSD. And if you're one of those people, here they are explaining to you how to claim some, to open a claim for their bankruptcy filing type stuff. Now, I don't have any exposure to this, but I thought it important to share it, because I know a lot of people are exposed to this. Moving on, so Sentinel is reminding you that if you have LQTY from Liquidity, then if you have it staked, you can vote on the ETH carry vault, which is like this iPort ETH carry vault, and you can earn bold, because they're the only ones that I know of that are bribing. Maybe we can check actually. Liquidity.org. Open this one, I guess, and go to, let's close that just to get it out of the way. Stake, voting. Yeah, so this is the iPort carry vault. So if you vote on it, you're going to get your share of this $600. So anyways, yeah, if you do have that, go and get your votes. Vote on that if you want. But it's just reminding you that is there. That's bold coming from Sentinel. So Sentinel's fees or Sentinel's income from this vault, they're using bold to somehow they're just supplying bold. This is not coming in any way from the protocol. It's just coming from them. Okay, moving on to Worms here. Worms is talking about this thing, Temple.fun. Now, Temple.fun is something I decided to open and use because it's pretty cool. Because I have an old meme coin that I created on Virtuals Network. Virtuals Network changed everything, so it stopped being like an AI coin. And then I had this liquidity pool and filled with these tokens. I had holders. I couldn't just pull the liquidity, so I decided to migrate the idea to this Temple.fun. So you can go to the Temple.fun and play with this. He's just kind of reminding people that there's a honeypot there. And I think this honeypot is pretty interesting, because like it's not like a traditional like white hat hack where you would find like a bug bounty, where you'd find some sort of bug. You would submit the bug to them, trust that they're going to pay you, and then negotiate with them to get your bug bounty, right? This is like there's $10,000 there now, and it's just like legally they're just saying it's a honeypot. If you can steal the money from this vault, it's yours, no matter what. You know what I mean? Like there's not going to be no questions. So they're actually encouraging people to try to hack this thing, which is what a bug bounty normally is. However, that you don't need to message them. I don't think you can just try to hack it and get the money out. Okay, and then they'll just be like, yeah, so you figured out a way, and then they'll learn. They'll learn what it costs to protect those vaults if that's something that happens, right? Okay, so Kelp DAO. I feel bad for these guys because they kind of got wrecked by layer zero, but it's kind of their fault as well because they only had one DVT, like one validator thing, but that validator was layer zero's validator. There's a long story, right? But I kind of feel bad for them. But they've been bleeding TVL like crazy since then. And so they've got this thing here that I'm trying to read and try to understand a little bit. It's not really long, so let me read through. It says, locked yield has a price nobody quotes. Everything you could do while the capital was locked. Call it a liquidity tax. The return you give up is not being able to move. Most yield projects charge it quietly. Liquid staking removed the tax for ETH. RS ETH removed the restaked ETH. The idea is what KUSD is being built around for the stablecoins earning without standing still. So I'm a little bit confused about what's going on here. It's not very clear to me, but I understand like what it's saying here. Liquid staking removed the tax for ETH. So basically when you like lock your ETH into, when you stake your ETH into a validator, then it's stuck there. It's doing nothing, right? It's sitting, well, it's not doing nothing. It's validating the network, getting APRs from that. But you can't then use that capital as collateral or something like that. But when you have an LST, yeah, you can. Now you're still getting the APR from the LST. Maybe you're giving up some of it to the protocol, the LST owner, like protocol. You give it some percentage of your yield, and the rest you can kind of take that LST out and do it. So RS ETH was for restaked ETH, which was like using eigenlayer. And I guess, but the idea here, I think they're gonna drop a stable coin to try to stem the bleeding of their TVL, right? So I hope they get it. I hope they get some product market fit here and some adoption, because I do like the protocol, but currently right now I'm not holding any, mostly because I don't want to hold restaked ETH because I think eigenlayer is not being monitored closely enough. Moving on, so this is pretty interesting. So on Frax, I believe this is on Frax network, on Fraxtal, right? You can buy this mansion in West Hollywood for $57 million. So if you just, yeah, so that's pretty cool. I don't know how this is going on. I don't know where this is. I don't know where the website is. He doesn't link to it. I wish he would, so that I could kind of click and open it up and look inside. But I think that's pretty cool. Like you can buy this like gigantic mansion. And it kind of goes back to like thinking about like NFTs and why I don't really like NFTs and why I don't really want to like do real estate. Like if you were to own something like this, it's not an easy thing to sell. Like you got to find a buyer, a single person, a single buyer or entity that was willing to buy real estate, that's willing to drop $57 million on your house. Now, of course, it might not be cash. They might open a loan or a mortgage or something like that. But I don't know. I don't think so. But that's pretty hard to get. It's pretty hard to like find someone to buy that NFT off you, this house, right? Okay, last one. Here we have Sonic Labs is doing pretty well. I'm very hopeful for them. I've got bags, of course, so I'm biased as hell. But 1 week later, Sonic is accelerating. The whole market is kind of starting to pick up, and things are starting to feel a little bit better than they did, a few weeks ago. But so Sonic processed 124,000 transactions yesterday. That's up 8% since last week. So yeah, Sonic's a good chain. It works really well. It was just kind of misrun, and they did some alienation stuff. They vouched for some protocols that were not a good vouching. Like they lost lots of money because one team rugged and the other team got hacked, and they just kind of did some foolish things, higher risk things, especially that Stream Finance that I mentioned. So that's it today. I hope this has been interesting and useful. I kind of blabbered on a little bit too much, but thank you so much for listening, and goodbye.